Hello, this is Cody Smart again with Wilmore Capital Lending based out of Austin, Texas. And this is part of our product series. Today we are going to be talking about investing in short-term rentals. Now, this is a different ballgame, right? I mean, investing in a short-term rental versus a long-term rental, it's different considerations, and I mean, honestly, slightly different underwriting. The way to start investing in short-term rentals, so you can either rehab it, which you can view our rehab video from before, or you can simply buy a home that's ready to rent in a short-term rental market. Some of the things you're going to be wanting to look at here are there any city or county restrictions on the short-term rentals? I've seen it. People make that mistake. You think you're going to do a short-term rental and you're restricted. So be on the lookout for those. Wilmore can help you with that, thinking about it. Now, there's a couple different ways you can actually get underwritten for a short-term rental. And the first way really is to do it again, kind of conventional, just like with the long-term rental. So you can go this route to where you're going to be using your debt to income. You'll be doing the full underwrite. You'll be doing 15% down, and you're going to be buying it essentially just as an investment Fannie and Freddie product. The other way to do it, the way the professionals do it, to where you can buy it under an LLC, is to go outside the Fannie and Freddie guidelines. Wilmore, of course, can help you with this. Some of the things to kind of consider by going that route is that, well, first, it's going to be potentially a slightly higher rate, not by much. You're talking 8% instead of 6%, okay? You're going to have a slightly higher down payment, so instead of 15, you're going to need 20. Outside of that, though, the really good things are that you don't need a full underwrite. So no tax returns, no W-2s, no debt to income considerations. Really what you're looking at is the rent on the home, and if you're going to against the mortgage payment. So if the rent will pay back the mortgage payment, then it'll work. Now, kind of some considerations are, well, what rent do you count? Do you count the actual Airbnb rent, or do you count a lease? Do you count the full amount of the lease, right? 75% or 100%? These are the types of considerations that you have to do. The different brackets of this are, if you do it under a Fannie Freddie, you're going to be looking at only 75% of an estimated long-term rent. Okay, but then if you go to outside of Fannie Freddie, called non-QM lending, then you're going to be looking at 100% of the estimated rent, and you're going to need to hit a DSCR ratio of usually at least 1.15, okay? But then what's going to happen there, right? You're using a long-term rent on a short-term property, and that's estimated by the appraiser. A lot of times what we've seen investors do is that reduces the amount that is able to be lent. Because the long-term rent on a short-term rental property is not going to be as high. With Wilmore Capital, you're actually able to use the actual Airbnb rents. If there's no history of Airbnb rents, we use a tool called AirD&A. And with that, you're able to get an accurate estimate of the actual rent you'll be getting, thus getting you a better loan. So Wilmore Capital is an expert at this. We would love to walk you through it, see your situation, help you look for houses. We are here for it all. We can do this loan all across the country. So be sure, like and subscribe. Go to wilmorecap.com. Follow us on socials. Hope to connect with you soon. Thanks.